Welcome to the Swing Trading with Cycles channel. It's January 14th, 2023. We're going to do an update on Tesla today. We did a video and take a look for a pinned comment. There'll be a link to that video, also a link to Cycles Analysis 101. Just lots of great background material. This is an update to that video about Tesla. So this was about maybe 6 weeks ago. And I talked about how I see a world where we get down to around the 120 level and maybe even, significantly lower than that. We got to, so we're right around 122 now, but we got actually all the way down to 101.81, so almost $100. We bounced pretty hard there, right? So we bounced almost, something like 20% here. But this is actually an interesting long trade. I posted this on Twitter. If you're not following on Twitter, definitely take a look for a link in the description, and in that pinned comment. And so this was Friday. Notice this is your daily chart. You have 1, 2, 3, 4, 5 days of consolidation. One of the important concepts, and again, that's going to be in the pinned tweet, we use cycles analysis as a way to just very easily quantify the price action. And what I mean by that is the most important thing it tells us is how long a rally generally lasts, right? And so, for example, like this was a short little rally that then failed, right? And so how long did that rally last? So from what was the low? That low is 266, that low is 265. So that was your low. So you got an 11-day rally there, right? From this low to this rally, really feeble, only 6 days. From this low to that rally, only 7 days. So it kind of gives you from this low, that's 6 days. We've been in this bearish phase, so we've had these really short rallies. This is a little bit of a longer one, right? This is when we were on more this is before we got the steeper part of the downtrend. That was 17 days, right? And so what has the rally been so far, right? Just these 5 days, right? We had this bottom candle, and then we had a gap up above the high from this candle. And so to be crystal clear, this creates a swing low, right? And so that becomes your line in the sand, the 115 area. Not exactly 115. I think it's smart to gives your stops a little bit of distance, but right in that area. So I got in around 118, just a little bit above. So something like $3 of risk for, a decent amount of potential upside. And we'll talk about what some of those levels might be. But we rallied for 5 days. We're also holding above the 10-period moving average. So it's likely that this is a new daily cycle. And if this is a new daily cycle, I suspect this is actually a new weekly cycle as well. That, this week, the week before last week, the first week of January, that's when we made that low, that final low, that big green candle. And that was week 32. That was after topping out on week 13. So we had a 13-week rally, which was pretty feeble. And then we had a massive 19-week decline into a week 32 low. And so I suspect that was week 1 of a new weekly cycle. And so next week, we'll be starting week 2. Now, does it mean we're going to rally for 13 weeks again? Maybe not. Maybe we rally even longer. But it tells you could have a little rally forming, and important to see these conversions. So this blue line here is your 10-period moving average. The yellow is your 200-period moving average. This is a weekly chart, so that's your 10-week moving average, and this is your 200-week moving average. Notice the 10-week moving average is moving aggressively lower. If this is a weekly cycle low, this will cross above that and close above it. And notice we haven't closed above the 10-week moving average since this top really this was a double top. So since this double top of that, so that was back in September. And so again, we could have a nice little, and obviously the 10-week moving average is moving lower every day, but that just gives you another kind of gauge for how far this rally could go, even if it's bearish and it's not a longer term bottom, right? And then you could see a world where the 200-week moving average becomes a cap. Right now, that's right around the 165 level. That's obviously way above where we are now. I'm not saying we're going to get all the way up there, but it just gives you a kind of a sense. You imagine you get a rally for, even in a bearish cycle, we should get a rally for at least 3 weeks, right? Maybe even 4 weeks. Because again, this was a bearish cycle and it rallied for 13 weeks. So just, you want to be open to that and ready to potentially capture the upside. I certainly am. And if you think about the monthly chart, what is this doing to the monthly? This is where it gets exciting, the multiple time frame analysis. Boom! That is a potential bottoming pattern on the monthly. We made a lower low below last month's low, below January's low, and that would target a higher high above last month's candle, or last month's high, which was $200. I don't think we're going to get all the way up there in this case, but that's generally how this kind of thing would work, that we make a lower low and then we complete the job and make a higher high. So you could see a world where we're not going to get there by the end of the month, but maybe there's a world where we get back up there by February, right? Notice that getting back above 200, the stock would still be down over 50%, right? Because our all-time high is 414. So that wouldn't even be a crazy rally, even if it's going to roll over and make a lower low. So definitely some nice upside here. And if you look at the quarterly chart, because we're so early in the quarter, everything kind of converges. It's doing the same thing. So you're having the possibility of this becoming a bullish outside quarterly candle as well. And to kind of cap it off, look at the yearly chart. That's the first, 2022 is the first significant red year that Tesla has had since it started in 2010. These are yearly candles. Each candle is an entire year of price action. And notice you had this period where price didn't do much, and then this huge explosion in 2022. This could become essentially a consolidation of that big 2022 move for the next big push higher. Again, that's how we use a small trade, but then make sure that we're looking at the higher time frames. And we'll close out by looking at the hourly chart to understand what are those lower time frame levels that we want to be aware of. And clearly, you've got price kind of consolidating underneath this area around 124. And you could see a world where if we could break above that, right? If we could break above this cluster of consolidation, you see these three red candles that kind of started that move, right? These candles are the ones that took price down to that level. You see a world where we can kind of contend for that high right there. So that's right above like 135, 136. And so I would see that as a potential target zone that we could get to, again, even if this is going to be a bearish move. And so that's a nice upside from here, especially with the limited risk to the downside. And again, you can see that stop level on this chart pretty clearly, right? Right around 15 bucks, 14 and a half. If we fall below that, then very likely we retest this area and it's unclear if it's going to hold. Maybe it does and we get a false breakdown. We can always get back in. But you could see a world where the other exciting thing is above 135, you kind of get into no man's land a little bit. Let's zoom into like the 15-minute chart actually. That might give us a kind of a clearer view. Right. So you kind of see a world where this downslope, right, could potentially be taken out relatively quickly, just based on, like, you can kind of see it's not like, in some ways it's the most vertical part, and this is your 15-minute chart. It's the most vertical part, and like this is an important kind of cluster, right? Like this big down move. What percentage move down is that? It's like if you can take out those big capitulation candles, so that's a little 10% move down, right? And then this whole move from here to, let's say, here is another 10% down, right? So you can see a world where you can start, like, once you get above 135, you can kind of take out these downdraft moves relatively quickly, short squeeze style. So we're going to be watching for this. Definitely a multifaceted trade in terms of making sure that you're looking at all the time frames, as we generally do on this channel. And we'll keep you updated on Twitter as this kind of plays out. And this just may be a sign of other stocks that are bottoming just kind of across the board. So keeping a close eye on the overall market. The reaction to the CPI was obviously bullish, but we have that Fed meeting coming up in the first week of February. So wouldn't be surprised if that actually causes a weekly cycle top for Tesla, and maybe the market starts to roll over there as well. So want to be aware of those risk points too. So that's all we have for today. So that's the Tesla trade. Worst case scenario, it's a short-term little bounce where we can make a little money. Best case scenario, maybe a long-term bottom and a way to kind of get into the stock at a really low basis for pretty, obviously, a pretty favorable reward to risk ratio. So that's all we've got for today. Thanks for watching, folks.